Welcome back to the Stock Guy Analysis. All right, let's dive into something pretty wild that's happening in the Ethereum space. There's a company called BitMine Immersion Technologies, and they are making some absolutely massive market-moving plays. We're going to break down exactly what they're doing, why they're doing it, and what it could mean for everyone. So if you've been on crypto Twitter or any social media lately, you've probably seen the buzz. A gigantic transaction just hit the blockchain, and it got everyone talking with posts like this one popping up everywhere. The consensus, some very, very smart money, is making some serious moves. And that move, it was a purchase of Ethereum worth almost $30 million. But here's the crazy part. For the company we're talking about, buys like this are, well, they're becoming business as usual. This is just one small piece of a much, much bigger puzzle. Okay, so first up, let's just focus on this one single event. By deconstructing this one splash, we can start to get a feel for the absolute size of the whale making all these waves. Here's the scoop. Straight from the blockchain data on November 1st, BitMine scooped up over 7,600 ETH. And they didn't just buy it on the open market. They went straight to Galaxy Digital's over-the-counter desk. This isn't some anonymous whale, you know? This is a publicly traded company, BMNR, making a huge statement. And this wasn't just a one-off thing. It's just the latest buy in what can only be described as a relentless shopping spree. So, how relentless are we talking? Well, this latest purchase brings BitMine's known stash to a staggering 3.4 million ETH. To put that into perspective for you, that's more than 2.7% of the entire circulating supply of Ethereum. All of it held by one single company. And that, of course, brings us to the billion-dollar question. What on earth is the master plan here? Because these aren't just random impulsive buys. Oh no, this is all part of a very deliberate, very ambitious grand vision. You know, the easiest way to wrap your head around what BitMine is doing is to think about what Michael Saylor's MicroStrategy did for Bitcoin, but with a really important twist. See, MicroStrategy treats Bitcoin like a passive asset, like digital gold. They just buy it and hold it. BitMine sees Ethereum as digital oil, an active asset. They don't just accumulate it. They put it to work, staking it to generate a steady yield. And they've given this whole grand plan a name, a pretty epic one, actually. They're calling it the Alchemy of 5%. And the goal is just as massive as it sounds, to acquire and control a full 5% of all Ethereums out there, which comes out to roughly 6 million ETH. The brain behind this whole operation is Tom Lee. You probably know him. He's the co-founder of Fundstrat. Now he's the chairman of BitMine, and his take on Ethereum is incredibly bullish. He's on the record comparing ETH today to where Bitcoin was back in 2017, right before that legendary bull run. He's even calling this Ethereum's chat GPT moment, that tipping point where its utility just becomes undeniable, making it the digital oil that's going to power Wall Street and AI. And believe me, they are well on their way. Just look at this. They're already holding 57% of their 6 million ETH target. They're more than halfway there, and they've done it in just a few months. That is just an incredible pace of execution. But this strategy is about so much more than just buying and holding. So next, let's look at how staking is the fuel for this entire machine, turning what could be a static pile of crypto into a dynamic yield-generating engine. The company's whole mantra is simple, but it's really powerful. It's accumulate ETH, stake ETH, and grow ETH per share. Every single thing they do is designed to serve this three-step cycle. The end goal isn't just to benefit from price going up, but to actively grow their stack of ETH, which delivers value to their shareholders. So, how exactly are they doing it? Well, it's a pretty sophisticated approach. About 70% of their holdings, the core of their treasury, is staked directly on Ethereum's main network, the Beacon chain. That's for maximum security. Then the other 30% or so goes into things like liquid staking, which gives them a token back that they can use in DeFi for even more flexibility. They're even experimenting with restaking to try and boost that annual yield up to 5, maybe even 8%. So that 70-30th split, it's a very deliberate balance, right? They lock down the majority of their treasury for max security, but they keep a flexible portion on the side to chase higher yields and adapt to the market. Pretty smart. And what does that all add up to in real money? Right now, just based on the ETH they already have staked, BitMine is generating an estimated $40 to $50 million a year in revenue. That's pure cash flow, just from participating in and securing the Ethereum network. But we gotta be real here. A bet of this size is a massive high-stakes gamble. So now let's talk about those massive risks and the equally massive rewards that are on the table. Let's start with the rewards because it's pretty eye-popping. Since they pivoted to this Ethereum for strategy, BitMine stock, ticker BMNR, has shot up over 700%. I mean, for anyone who got in early, the rewards have been absolutely astronomical. But, and this is a big but, that reward has come with some absolutely insane volatility. Just look at this 52-week range. It's gone from a low of under $4 to a high of over 160. This is not a stock for the faint of heart. It has been an incredibly wild ride. So, what are the key things to keep an eye on here? Well, on the upside, you've got huge potential tailwinds like all the new money coming from ETFs and the upcoming Fibonacci network upgrade. But on the downside, this strategy is completely at the mercy of ETH's price swings. Plus, there's always the risk of regulatory crackdowns or that they'll have to dilute shares to raise more money. One of the ways they're trying to manage all that risk is with a pretty hefty cash buffer. The company keeps over $300 million in cash on hand. That gives them the firepower to not only survive a market downturn, but to actually take advantage of it by buying the dips. Okay, so that brings us to our final section. Where does all of this go from here? Let's take a look at the roadmap and try to figure out what's coming next. I mean, the speed of their execution has just been breathtaking. The strategy only launched back in July. By August, they already had 1 million ETH. By October, their treasury was worth more than $13 billion. It's been an all-out sprint, and they're aiming to hit that 5% finish line sometime in 2026. So, what should you be watching for in the immediate future? I'd say 3 main things. First, their Q3 earnings report on November 14th. That'll give us an official update on their holdings. Second, the Fibonacci network upgrade and how that performs. And third, just keep an eye on the blockchain data as they push toward that next big milestone of 3.5 million ETH. And all of this leaves us with a big final question. Is Tom Lee right? Is this truly Ethereum's chat GPT moment where one company's bold move completely redefines its value for the entire world? Or is this an all-in gamble that's just too big to win? A bet so huge that if it fails, it could create massive waves of its own. I guess only time will tell. Thank you for watching, and please subscribe to my channel.